So welcome. I'm Coach Chris, and I have a special guest today. Today we're going to talk about ICHRA and QSEHRA. That one has kind of come up real recently. ICHRA and QSEHRA, just so you know, for history reasons, actually came around the exact same time as the Affordable Care Act. It's been around, it was kind of built in there. But of course, the ACA took over all the airways. Everybody was talking about the Affordable Care Act and Obamacare and how they hated it or didn't or whatever. And that just kind of, the QSEHRA and ICHRA was like sneaking underneath the radar. I ran into it, I think the first time about 6 or 7 years ago, a small company who offered QSEHRA, and I had to help them find MEC policies, which stands for minimal essential coverage, because they, you got a tax penalty if you didn't have the minimal essential coverage, and this one company was offering QSEHRA. And in order to get that, you also have to have minimal essential coverage. So I ran into it about 7 years ago, and it's been slowly growing. And then a couple of years ago, ICHRA kind of became like, I don't know if it's because the rates went up, that became the hot topic for everybody. And so things have changed, but it has been around a long time. It's just more recently that we've been talking about it. And ICHRA, the QSEHRA is for small businesses. Now anybody can use it, but anyone can use ICHRA, but QSEHRA is only for under 50. Anyone can use ICHRA if it makes sense for them, even if they're a group of 3 or something. So there's no minimum like there is with QSEHRA. And the rules are slightly different. And I think there's been a lot of confusion. And I saw a lot of tests and questions about that. And I was talking with Todd, my friend here, I don't know, about a month ago at the United Healthcare, when I was at that United Healthcare roundtable, and we started talking about it. And all of a sudden it was like, all right, Todd, can I have you come on and speak with this? So Todd, I have a couple questions for you. One is, how long have you been actually selling health insurance?
So I got into the insurance business straight out of college. Much like everyone else, I kind of fell into it. So I worked for on the company side of things for about 6 years as being a group rep, which gave me a good base. And then I bought my existing agency in 1999. So I've been on the agent broker side of the dark side of the fence since 1999.
It's 1999. All right. So what is your niche right now in the health world? Is it individual, Medicare, group? Like, what would you say is your niche?
Those those three. So our agency focuses on benefits only. We don't do any other types of insurance. We don't do financial products. We do benefits only, and we have a strong focus on the Medicare market, the ACA marketplace, and then typically small groups. Which small group by definition is 2 to 50. You get to 50 plus, you get to fall on some different rules. And you start getting a little more competition. It's not that I will turn away business over 50. I'm just not actively marketing towards it because there's a good niche, which I'm assuming most of the people on this call are kind of in the same niche, we'll call it, kind of maybe the Medicare and or the ACA, and some may deal with small group.
Yep. And I guess, what was it that made you decide that you wanted to stick with it? I mean, you went out of college, and a lot of people switch care, what was it that made you go, you know what, this is it. This is what I like.
The short story with that is probably falls into like going into, I had no idea what I wanted to do getting out of college. So I'm like, you know what, I'm going to just start interviewing around. And then we had a family friend. So I grew up in Green Bay, Wisconsin, and there was an insurance company based there. I don't know if anyone remembers Employers Health Insurance. And that got sold. And then there was American Medical Security, if anyone's familiar with those two names. But a family friend who was who worked at Employers Health Insurance, and she asked my mom, she's like, what's Todd doing now? He's going to graduate from college. So because you should come interview here because there's a job and there's a new VP of sales and marketing, and they're looking for, sales and marketing people. And I thought, well, what a bore. Who wants to work for an insurance company? I'm just going to go for the interview experience. So I interviewed, and it wasn't what I thought it would be. It wasn't, here's the phone book, start dialing for dollars, and I'm going to talk to a 7-year-old lady with her cats crawling over me out of her kitchen table trying to sell her a final expense policy. It was calling on agents and brokers, and and then it was kind of like, you get a base salary and you get an expense account, and we'll give you a car allowance. And then, by the way, if you can sell a decent amount of business, you can qualify for a bonus based on production. And then he said, come out of college back in the day, I'm 57. I'm thinking, if I can make like $25,000, I can move on and get my own apartment. And he says, well, we fully expect you to make, for people in your similar position, between $65,000 and $70,000 your first year. And I'm like, where do I sign up? That kind of launched me in the insurance biz. And then
you never look back, right?
Now, but the working for the companies was a really good base to see how the companies operate, and what
Right.
goes into their thought processes. And the company who I originally joined, they had a 5-month program where you sat at every area of the country of the company. You did underwriting, you did claims, you got to see while PPO negotiations went, you answered the phone, you took quotes, you got to go to field office. So it's a really good background for eventually ending up where I am now, which is like yourself, as an agency owner.
So you learned it kind of from the bottom up. I mean, to be able to sit with underwriting, I've never done that. I mean, underwriting isn't as important as it
Correct.
used to be, right? Though it still plays a part, but you got to learn it. So that's a really solid foundation. So when the Affordable Care Act came, what did you think? Were you like, yes, this is going to be good? Or were you like on the other camp going, I don't know
That's
what's going
probably
to
much
happen?
like everyone else. They had no idea what to think of it. I wasn't real excited about it. And I'm assuming a lot of people on the call are not from Wisconsin. There are other people from all over the place.
Right. From all over the state.
And you're probably aware, Christina, we had the HRSP program.
Yeah.
We had something in Wisconsin called the Health Insurance Risk Sharing Plan. And it worked really well here in Wisconsin. It was kind of like I was advocating for, like, well, I don't know why the feds wanted to take over healthcare. They should just look at the Wisconsin HRSP model and pattern it, because it worked, because everyone participated. The providers participated and gave up something. The insurers participated and gave up something. It was only run by 3 people. It's not this monstrosity that we have going now. And there was even some subsidy involved in it. And the rates were not that much more than the open market. And I can guarantee you, even adjusting for inflation, they probably would have been half of what they are now. But it is what it is, and it's now it's morphed, and now the subsidies become big. I had this conversation last night with some people, and I get a questions like, well, Todd, how's your business? Said it's really good. There's a lot of people turning Medicare age. And I said, as far as the Affordable Health Care Act or the ACA, I go, it's not hard to sell virtually free insurance to a lot of people with the subsidies involved. So it's turned out to be, it's obviously opened a lot of doors for a lot of people who had trouble accessing coverage. There's no more underwriting, there's no more pre-existing. So but there's still quite a bit out of pocket costs involved, with the subsidies mitigate a lot of that. And anybody who's in that end of business, I'm sure it's helped them.
And for those who don't know, Hearst was if you couldn't get health insurance, which there was plenty of places you couldn't because you had a tumor when you were a child or something, and the United would not take you anymore. Wisconsin let anybody who had that go into this pool. And when the Affordable Care Act changed, there wasn't much changes in Wisconsin. I mean, I think of the 10 requirements, we had like 9 already. So there wasn't a whole lot of changes in as far as how health insurance worked in Wisconsin, but I know in other states there was massive changes. As I mentioned before, in Georgia, one lady on a group policy had to tell her group insurance a year in advance that she was going to get pregnant. She had to pay a higher premium for that entire year. And if she got pregnant before that year was up, they wouldn't cover it. So, some states had massively drastic changes. Wisconsin didn't as much as far as the way the insurance worked. But so, yeah. So Todd, I guess, tell us what about ICHRA, QSEHRA, what you think of it, how you use it.
Yeah, it's I had, with prior to even QSEHRA's or ICHRA's or had come around, I had, I presented group insurance plans to small groups, and they're just like, all excited about it. And then you show them the rates, and they're like, there's no way I can possibly do that and afford that. And in prior to ICHRA and QSEHRA, you used to be able to do through Section 125 or other avenues. You used to be able to do premium reimbursements for individual plans. I mean, there are avenues to do that. Then the ACA came around and said, absolutely not. We're stopping that. And as you mentioned, Christina kind of summarized that a little bit, is that at the tail end of the Obama administration, that's when QSEHRAs were kind of put into place, and you could do it again. And then they tweaked it a little bit, and then they had, there's some mitigations on it about how much you can contribute and other things. And I was like, oh, yeah, I don't know. We'll see how this works. I'd start investing. But then, at the end of the Trump administration, that's when they introduced ICHRA. I started reading about that, and it was extremely flexible. However, there were lots of gray areas where I wasn't overly comfortable until I could figure this all out. So, but it is the ICHRA is more flexible than a QSEHRA plan is, but there are reasons to do both. Now, personally, I write a lot more ICHRA. I have not written a lot of QSEHRA plans, but after following it for a while, and after probably about 18 months after introduction, and, getting some confirmations about certain rules that applied in there, a lot of the gray area fell away. And I could see where this could really be a big advantage for a lot of groups. Now, saying that, it's highly dependent upon where you live and how competitive your marketplace is versus small group plans. I mean, there's reasons to do it just if someone says, there are some employers who are like, listen, I don't want to play insurance anymore. I want to get out of the insurance business. And ICHRA is a way to get out of the insurance business, regardless if maybe the cost is relatively the same. Here in Wisconsin, we have a very competitive insurance market with lots of insurance carriers. And 9 times if I quote 10 groups and then in the small group space, 9 times it's worked out better for them to do an ICHRA by a pretty decent margin. And there's lots of reasons to do it in my thought process as well.
Right. So I guess, so for those who don't know, what is the QSEHRA regulations?
Well, the two are kind of, you can kind of put ICHRA and QSEHRA kind of in the same bucket. There's some subtleties. I mean, there's charts and everything. I mean, there's just some real, they're both, QSEHRA is confined to under 50. And ICHRA, like you mentioned, ICHRAs can be any size group. If you hook in a group of 2,500 people that spread all across the country, you can do an ICHRA plan. You can, because QSEHRA is only, adaptable to under 50 lives. And then there's contribution restrictions on QSEHRA where it's only $5,300 for a single and $10,700 for a family. And not that that's a minimum amount of money. That's still a decent amount of money. But with ICHRA, I mean, the sky's the limit. If you want to offer an ICHRA contribution, that's a sizable amount. You can certainly do that. So there's some real subtle things. The other thing, probably one of the other bigger difference between QSEHRA and ICHRA is on a QSEHRA, you can still take advantage of the premium tax credits. However, they're reduced. Your premium tax credit is reduced dollar for dollar by the ICHRA or the QSEHRA offering from your employer. So if your employer says, I'm going to give you $300 and there's a $350 tax credit, well, guess what? Now you get $50 via the tax credit. So, I mean, there are reasons to do it. I've just, for a reason, focused in the other groups I've talked and discussed. I focused on ICHRA. There's reasons, like I said, to both, and it may become very dependent. I just found the ICHRAs to be a lot more flexible, and that's where I've kind of focused my time on.
I think I found the two companies, no, I guess I have 3 companies that did QSEHRA. Now, this was even probably before the ICHRA thing was known. It was because all of their people already had coverages through spouses. And so they were kind of contributing to help reduce their spousal, what they had to pay, and then being able to use it for medical expenses. So QSEHRA worked, and they would have one person on the marketplace. And yeah, so for those of you who don't know, if somebody walks in and tells you they're getting $300 or $100, whatever it is from QSEHRA, when you get to the end of the application where it says, we're offering you $400 of tax credit, do you want to use it all? You have to unclick that and say no. So if they're giving a $400 tax credit, you have to subtract $100 so that they only get $300 of tax credit. And that is always reported. I ended up taking over a company that had done QSEHRA kind of on their own. They didn't have anybody explain it. And they had 3 people that got screwed every year. And they didn't know why. I mean, they were taking this great tax credit, and then they'd have this, to pay for medical bills. And then at tax time, they would have this huge tax bill, and they didn't know. So they now have group policy, but so
the answer to that question is when in doubt, you never can get double taxation credit.
Right. The government's right. The government says either us or them, right? Either they're helping or we're helping. So
that's a simple answer for anyone who's got a question. No double dipping.
Right. ICHRA, though, you either take the ICHRA or the tax credit. It's an either or. And I guess I haven't actually had anyone with ICHRA, I think, because we're still a small town. If somebody walks into your office or they're calling you, to enroll, and they say, yeah, I've got this ICHRA thing and they're offering me blah, how do you tell them, how do you differentiate whether they should take the tax credit or stick with the ICHRA?
I mean, it's real simple. It's like, what is your employer offering you? You do quick calculation. I don't know. I think, we use Health Sherpa in our office to do the calculations. You can do calculation in 30 seconds. So if someone's calling me, and saying, I'm involved with an ICHRA plan, it's real simple. What is your employer offering you? Oh, you're getting $300. Well, here, it looks like via the marketplace, you're getting $350. So what you're going to do is politely decline the offer from your employer, saying, I'm going to take advantage of the marketplace tax subsidy because that's more than what you're offering me. So, and more often than not, though, it's like we don't have people calling our office or an ICHRA, we're setting them up.
Okay. which is
So I have a,
typically, yeah.
yeah. So I mean, in our office, we have a decent sized block of small group business. And as they come up for renewal, I'm going through each of them and saying, you may want to consider, I'm going to, broach something with you. It's called an ICHRA, and explain, ICHRA, individual coverage health reimbursement arrangement. And I just tell people that's just a fancy term for a way to you provide tax-free benefits for people to take advantage of the marketplace, and you can stop playing insurance. And then the flexibility part comes into as groups get bigger. I mean, you can do different reimbursement amounts by classing. Now you can't make up your own classes. There's 11 defined classes. Here's the typical ones, kind of union versus non-union. However, you can do, if you have a little bit bigger group and they have employees in other geographic areas or other states, those can be two different classes, and you can complete them, or you can treat them completely differently in terms of the reimbursement amounts you want to do.
Right.
Oh, that's that's where what attracts me. It's the greater flexibility that the ICHRAs offer. But so that's, yeah, so typically we're setting them up. And I don't know, if people are familiar with the setup or you want to launch into that.
So yeah, how do you set up the ICHRA? Because I don't remember who it was. I know somebody said, "Oh, if company does ICHRA, my company I'm working with does ICHRA, I'm out. I don't get paid anything." And I went, "No, that's not how this works."
Right. So the first thing, I mean, you set up a plan design. The plan design is obvious. It's just plan documentation. Like anything else, if there's a tax break involved, the government wants to track that. So you need to set up a plan document. I mean, you can go just online, and there's certain and get plan documents, and a company can self-administer it if they want. Now, I'm not a real big fan of that, because there's some obligations involved. Anytime there's taxes involved, there's some obligations involved. But so typically use like a third-party administrator. So, or you can use a platform. If anyone on the call is familiar with like Take Command or NextBen, those are like two major platforms that do it. Those are kind of an all-encompassing thing. But I'm not a big fan of the platforms just due to the fees that they charge. It doesn't make sense to me. So all you need to begin the introduction of an ICHRA is to set up plan documents. So me personally, we deal with a local third-party administrator. I mean, they're right down the road from us. They do a really good job. They're extremely inexpensive, but you set up the plan documents, which is really just, it outlines the terms and conditions of the ICHRA. It defines the eligibility requirements, who's eligible to participate, the reimbursement schedule or amounts that the employer wants to set up. Now, for the reimbursement schedule, that's something as a broker you should probably actively participate in, because you're going to get into conversations about, well, what do other companies do, and well, how do other companies reimburse their employees? If somebody's on a group plan already, they probably they have some level of contribution, which probably people know the minimum contribution for an employer-sponsored plan is 50% of a single person's premium. And if there's multiple plans, it's of the lowest cost plan. But you get into conversations like that, and that's what goes into the plan document about the reimbursement schedule. And then you can also, the ICHRA, you can reimburse more than just the premium if you want.
Right.
So, and if there's excess, if the person buys a plan that's less than the ICHRA contribution by the employer can say, well, you can use that additional amount for any 213D expense if you want. So all that whole list of things that, if people are familiar with the HSAs, all those tax-free reimbursable, you can do that if you want. You don't have to. And then the big thing also in the plan document is the procedure for getting the reimbursement from the employer. So the biggest pushback I get, or the biggest issue or hurdle to overcome when you do an ICHRA, people are just used to, especially if like I'm doing it mainly you do it for virgin groups, but also for groups that have group insurance. Employers latch on out like, listen, I just phrase that you can get out of the insurance business and provide benefits tax-free, just like you're doing now on your group plan, because that's an expense, that's a deductible expense. So the ICHRA contribution is a deductible expense, just like on your group insurances. So you get out of the insurance business, you're providing tax-free benefits. And now the way we do it, or our office does it, I tell them, and your employees are going to get one-on-one, basically concierge service to walk them through the marketplace. So this isn't like, let's set up the plan and figure this all out and then wash our hands of it and tell the employees, here's $350 a month, go to the marketplace and figure it
Right.
out. No, that's a really, really bad idea. If you want to see an ICHRA plan fail, do that.
Right.
We do one-on-one consultations with them, walk through it at all, answer their questions, provide, personalized comparisons, and then, we'll do their enrollment as well. And then my big sell point for the employer is now you no longer have to have some dummy like me come in and talk about your group plan, how it's gone up 15 or 20%, and how do you further want to reduce your benefits or put more burden on your employees. Our conversation at renewal will now be, hey Todd, what's the is my ICHRA contribution? You think that's still fair? Yeah, it's the marketplace here has been really stable in Wisconsin. You don't need to do anything. Great, I'll talk to you next year.
Right. So Jill, you asked why Qsehra Ichra versus direct with the carrier, because then you're no longer have to deal with rate increases and changes. It's just a fixed dollar amount that you're giving each year to your employees. And you may up it, like you may go, all right, I'll go 2%, but most health insurances don't go up 2%.
Right.
Even if it's a nice one, like 5%, I'm like, hey, 5% is pretty good. So they don't have to do the administration. They don't have to do COBRA. They don't have to go in and out. They don't have to tell me, hey, this person's no longer employed. They just are no longer contributing. They still keep their marketplace coverage. They don't lose their deductible. So there is some pros and cons to that. And then Sharon, you said, do you use any of the platforms as an independent agent to remain agent of record? And absolutely, I've used Take Command. So Take Command, at least the last time I checked, was $15 a month and $15 per member. That's their fee. And then they handle all the paperwork and the employees update the stuff there and they pay them. But I'm the agent of record. I'm the one who's enrolling them. I say, all right, I'm going to talk to your employees. And then they call me and we enroll them. And I know how to work it with the tax credit. So yes, so if you have a third-party platform, and there are some local ones. Todd's found a local one down in Milwaukee. There are local ones. Take Command's more of a national. There's lots of them. You should remain the agent of record. And if they don't want you to remain the agent of record, you need to find a different platform.
A lot of the platforms, their business model is to go after, like here in Wisconsin is kind of odd, and I don't know if it's true in other states, but we have large super agencies, which I saw that coming like 15 or 20 years ago. Every agency here of any size has been bought, sold, or merged probably 3 times over.
Right.
We have large super agencies that, quite frankly, only want to deal with 100+ business. Some of them they get down in the 50 to 100, but anything under 50, and you start getting down under 25 or individual or Medicare, they want nothing to do with it. Those platforms cater to large groups.
Yeah.
And large group brokers do not want to offer ICHRA. They can explain it as well as anyone's employer and all the intricacies of it. And at the end of the day, they're going to say, here's all the reasons you shouldn't do it. Because they charge a lot of consulting fees and make a lot of money, and they know nothing about the individual marketplace. So if you in a sweet spot for ICHRAs, which maybe a lot of people on this call are in that market, is that kind of 50 to 200 market. Because if you have groups like that, it's the wild, wild west. You can come in and get any rate increase that the insurance company, there's no mitigation on what the insurance companies can give you for a rate increase. And I picked up a group, they got back-to-back 45% rate increases. I'm thinking,
that's insane.
How can you possibly operate your business with everybody knows how much the cost of insurance is, and insurance carriers coming giving you back-to-back 45% rate increases. So this is a large group broker, and to their credit, and I know the person, I didn't know her real well, the broker, but I'm aware of her through being in the business forever. She said, I can't do anything to help you. You need to call Todd Catlin and his firm and talk about an ICHRA. And she basically gave me the group.
Which is nice.
They don't deal with it.
Right.
So that's a real sweet spot for, I'm not sure what the carriers are doing, because they're not going to get those groups back. I mean, the guy who did this, and this is like a 75-person group, he loves it, just loves it. He's become an evangelizer. He speaks at his, like, when he gets together with other CEOs for his trade groups, he talks about it all the time. He says, you should call Todd in his group. You'll really love this.
It is a lot easier on the employers. And honestly, it's easier for the employees if they understand it, right? So the transitioning from what is group health insurance to this is about the spin. It's the same thing. You're going to get health insurance. The employer is still going to help you pay for it. But now you get to pick your own, right? You know, especially if
That's
you're
a big
narrow
sell.
network. I don't want to go to the narrow network my employer is offering. Hey, guess what? You can pick your plan. You can take the gold, you can take the bronze. You don't have to be narrowed. And it's not necessarily any more work than any other ACA. Now, yes, if you get a 75 life that suddenly shows up at your door, yeah, you got 75 people, you got to get them enrolled in a month's
A
time.
good problem to have.
It's a good problem to have. That's when you hire somebody. That's when you reach out to some other agents and ask for some help. But it can be really easy. I mean, it can be so smooth. And then open enrollment does get a little crazy because now you got to do the one-to-one, make sure you get their NK stuff. But that means you're hiring somebody. Again, good problem to have.
And Christine, let me hop in there because that brought me my question. So in all the ICHRA groups that I've set up, your biggest hurdle to overcome is, change is always bad, obviously, if you're an employee. No one likes health insurance, nor they understand it. They just know it's really expensive and they don't know what to do. We all know that. But if you're on a group plan, guess what? The group plan or the employer is their mommy and daddy. They take care of everything. They choose the company, they choose the plan, they tell you how much it's going to cost you, and it's just going to come out of your paycheck, and I hope you like it, and away we go.
Right.
You get at all that. However, for the employees, the feedback that I get quite frequently is the employees typically, they have to pay their own premium now. If you're in the ACA market, you set some of the plan. Guess what? Now I got to talk to you about how you want to pay for your plan. There's 6 ways this Sunday with most companies to pay. They're very extremely flexible. But that is the biggest hurdle. And then how the reimbursement mechanism works from getting the ICHRA contribution from the employer to the employee. Now you can do this where the employer self-administers it, but part of the legalities of it is they have to have confirmation that these people actually have coverage. Because I've talked to groups, typically some younger guys. It's like, yeah, I'm not going to buy a plan. I'm just going to take the $350 and pocket it. Uncle Sam doesn't like giving away tax-free money. They want their piece of that then. So there has to be verification that these people actually have coverage, and it's typically you need to do that on a monthly basis for people to get reimbursement. They need to show the TPA or the employer that, yes, I actually have a marketplace or qualified plan to get that reimbursement.
Right.
So they need that's is understanding how that works. That's one hurdle to comes up, and then having them pay their own premium. I've had employers push back and like I don't want to do that. This sounds really great. And I get to that point and I said, why would you not want to do this? He says, well, I don't trust my employees that they'll actually pay their premium. I'm like, it depends on if it's a benevolent employer or not. I'm like, well, good for you if they don't pay your premium. Then guess what? You're not paying their premium anymore. My take on it, you're a grown adult. I said, I'm sure these people all have car insurance and they have home or renter's insurance that they've had to pay their whole life. This is just another form of insurance that they have to pay. So just because you're not facilitating that or paying that or taking it out of their check, in my mind, is not a big deal. And I can tell you, once you get them through the initial setup process and they've done it once, that all goes away.
Right. Because you can set up, if I am correct. So they make their first month's premium, they show their pay, they show the cost, they put it, and then it can be automatically deposited, right?
Yeah, you're talking like just an auto
The
payment.
reimbursement.
Sure.
Yeah.
Oh yeah. Well, no, the reimbursement, you still need to show verification.
Every month?
Yeah.
Okay.
Some places may vary, but it's
Okay.
typically for sure quarterly, but a lot
Okay.
of places want it every month.
They want to
that
show
doesn't
proof that
mean-
you still have it. Yes.
And I've had employees they forgot to pay. Well, in the marketplace, obviously, if you're in a marketplace plan, you can get 90 days to pay. So that doesn't mean you lose your ICHRA contribution that month. It just carries forward in the next month.
Right.
So you don't have to
But
worry
you only
about
get that 90 days if you get a tax credit. So if they don't pay, they lose it in 30.
well, as long as you buy a marketplace plan, regardless of the tax credit.
Well, you don't get it if you have no tax credit. I've had common ground, and if you don't have a tax credit, they cancel it after 30 days.
We'll have a discussion about that one.
Yeah. Okay.
It could be.
So,
it could be
yeah. So Sharon asked, and I think this is because it's partly what he was just talking about. So Take Command will allow, so they have a program where the employer and the employee's contribution shows up on the payroll, and then it becomes a Section 125 payroll deduction. So yes, if they're going to do that, then you're not going to be the agent of record. But if you don't want them to do that, you don't want it to go through payroll, as we were just saying, I'm like, it's on them. They're adults. Like, I kind of feel like how much handholding do we need to do for employers and employees? So you could, but then you might get a finder's fee, I'm not sure, but then you are not the agent of record because that's their proprietary information where it's now on the payroll.
And I can tell you the platforms, their big pitch is like, we want to make this just like group, and we will do an arrangement behind the scenes where we're paying the employees premium. I don't know if you talk to carriers hate it. It's very onerous on the insurance carriers to set that up. And my whole point for employers, absolutely not, do not do that. I've picked up two large groups, because the platform has completely screwed up the reimbursement mechanism, and they've had people for 2, 3, or 4 months who've had no insurance coverage. I said, if that goes wrong and one of those people has a claim, guess who's going to be on the hook for that? You as the employer. Do not, this is my personal opinion. I know the reason that the platforms do it, they and the brokers who sell it that way. Well, we just want to make this easy and like group. Okay, this isn't like group. You're doing this for a specific reason. And one of the things that I'm like, you're not playing insurance anymore. You're getting the employer completely out of the insurance game, other than providing the plan and the reimbursement. Why would you possibly want to get involved in something if a payment gets missed on the platform, which goes right back to the employer, and the employer is going to get sued? This group I worked with, they had an employee who was suing them.
And I will tell you, if you give it to a third party, how do you know they're taking care of your client? How are they asking? Do you think they're asking them, hey, what's your medical doc? Like they're not going to know it like you do. So I understand the ease of, oh, it's going to go through my payroll, but then how it works is they have to create like a whole bunch of different accounts for these employees to pay, because carriers do not want individual coverage paid by a group. Like, so it's kind of a hassle. So yeah, unless you're getting a really amazing finder's fee, I wouldn't suggest doing that.
I've seen how they've been set up in the background too, how the platforms have set them up. It's I don't even know how they can pull it off, quite frankly.
Right. So Mindy said, because I've never come across this, how does this work for those who are on Medicare? So an employee who's still working but on Medicare, does that ICHRA or QSEHRA contribute towards their?
And both of them you can. So in ICHRA, if you're on Medicare, that could be reimbursable.
Okay.
That's a big draw, especially the group that I got picked up, was referred to me, who got those back-to-back 45% rate increases. He came here for a while, and it's, everybody knows everybody's an employer is looking for employees. There's apparently no one works anymore. So he said, hey, can I do reimbursements for Medicare people? Because I'm getting a lot of people over the age of 65 who I think can help me out and work for me. And I said, absolutely. So he just rewrote his plan document and included Medicare reimbursement.
And if anybody's looked at group and you have somebody who's over 65, it's expensive. So if you can do an ICHRA for a QSEHRA for over 65, in fact, you can offer, now I don't know how you would be able to do it. You can do ICHRA and group. So you can like offer ICHRA to a certain level and group to like the high end. I don't know if you could say anybody over 65 would get ICHRA versus group, but with QSEHRA, you can't. You're either offering group insurance or you're offering QSEHRA reimbursement. But if you do ICHRA, there is some maneuverability.
If you talk to carriers, it's technically that's written in the rule, but I haven't found a carrier who will offer group coverage along with an ICHRA. Just the fact that they're just concerned about anti-selection.
Right.
So even though it's authorized in the ICHRA statute, most carriers would not be real keen on it to do a group plan.
So Sharon said, how much are you involved in the compliance, the SPDs, ACA reporting, PI core fees, and the 90-day notices?
Me personally, I am not a compliance person. That to me is a drag on we're all salespeople basically, and we're helping people. Compliance to me, we got to comply with everything in life. Obviously, and especially in Medicare and health insurance in general, it's become very, very onerous. I stick out of that, and that's why I use a TPA to both set up the plan documents and also deal with the compliance. And most of them charge very minimal amounts of money to do that, to keep people in the clear.
Right. And that's why I use Take Command to be my third party or whoever, because then they handle all of that. Cause I don't do that now, right? I don't know if you guys are like checking your health Sherpa people who's grace period and trying to contact them and stuff. I let the insurance company is sending them plenty of documents. So Donna says, what if the employee is a higher earner so that they are not getting as good of a deal on the marketplace? What underwritten health products would you recommend in place of ACA?
You might want to speak to that one.
That's a totally different topic.
Yeah.
Donna, and we've talked about that, and that's actually going to be coming up in the future because of the whole, maybe the cliff's coming back and the short term is going away. So that'll be a different topic coming up. But if you are offering ICHRA, that is one of those things. You can move somebody to management. There's different levels, and you can give somebody who's making $100,000 more money for reimbursement so that they can go on the marketplace and just get the plan they want. I had somebody long time ago, that's what happened. They paid 100% of the managers. I mean, it was pretty much, they gave them like $1,000 a month, which was more than anybody needed. So there is in the ICHRA, they can layer stuff, but.
Let me hop in on that. So that's, and maybe the question was phrased as for the people, like let's have a sample company of like 15. And let's say most of the people are moderate to low wage.
Right.
Odds are they're going to get a much better deal from the marketplace tax credit, depending on age and other obviously various characteristics. But let's assume they're probably going to get a better deal, especially now with the increased subsidies. They're going to probably better subsidy from the marketplace than what that small employer is willing to offer or can offer through the ICHRA contribution. However, there's maybe one or two other people that help run that small group who are making a decent amount of money, pertinent to the question here, who aren't going to qualify for a tax credit. Well, that goes into how you're going to set up your ICHRA contribution in that strategy. And there's limitations on it. There can be, from the least amount of money you offer to the most is a 3-to-1 spread. Meaning, I want to give $300 on the low end. At the top end, you can only do 3 times that, so it can only be up to 900. So you gotta take account like what are the characteristics of my group? Do they skew younger, or are they kind of, is that everyone kind of like under 50-ish? So we all know you get to 50 plus in the marketplace, rates creep up there quite a bit.
Quite a bit.
And so you got to limit that. So either if you're trying to say your group skews old, and those are the people making the most money, which is a lot of times that's the case, you have to figure out your contribution strategy to encompass them. Now, if you encompass those people to help them out the most, guess what? Now you're moving your bottom end up because you got to keep that 3-to-1 ratio. Well, now the employer may be like, well, now I'm giving all these younger people way more money that they need, or I want to give them. So probably the only solution around that, if it's let's say it's one person in the group who's making a lot of money along with the owner, have a modest contribution level for your ICHRA. And then if that person needs to be taken care of, unfortunately, you probably just have to gross up their pay. Everyone's gonna get taxed on that, but it's better doing that, take a small hit there than take a bigger hit on everyone by moving up your whole scale. Right. And more often than not, probably the easiest way to set up an ICHRA contribution schedule is probably do it in 10-year age band increments. That's easy.
Yeah.
You don't fall in any, there's no affordability calculation or anything. Under 50, you can kind of do almost anything you want with an ICHRA. You can make it, if you're walking to a group and it's all really low wage people and they're doing a group plan where they get really poor participation, because that's the only thing the employer can afford, and it's a really high deductible plan that hardly anyone participates on, just completely blow that all out. They can make a quote unaffordable ICHRA contribution as a strategy, because you're going to tell them, listen, everyone in your group is going to get a huge subsidy. They're going to be in way better position financially. They can get a way better plan that they offer, and they're going to get personal one-on-one concierge service from me by walking through this whole thing. And guess what? You're out of the insurance business again, too.
Right. And don't underestimate the value of being an agent for an employer, especially under 50. Under 50, I mean, heck, 25 unless they have no HR person that's dedicated to this. And then you go, I'm it. I will show up. I've got some that we show up one day during open enrollment at a group, and I just walk through everybody through it. And that's my day or my half a day, depending on the size. And they just like, yep, that's my person. So it's almost in some ways better than dealing with the general public, because they know they're expecting you. They're happy to have you help. Now, I offer lots and lots of ancillaries. Todd doesn't do it as much, but I do. I go in there with dental and vision and accident and critical illness and short-term disability and go, well, hey, guess what? I can take your employer contribution. Let's say it's $500 a month. I can get them on the marketplace for less than that. You're only paying 50% and they're paying 500. I can get them on the marketplace for $20 or 200. And now you can give them $100 a month for their ancillary, and that's almost everything. So if you are talking to small groups, and especially if they're either talking about getting group insurance, I have talked so many out of getting group insurance when I find out what their income level is, because I'm like, dude, you're actually hurting yourself. You're willing to pay something that the government's willing to pay, and then getting them other things, because what they want to be able to do is offer benefits to bring employees in. Well, I'm part of that benefit package.
Yep.
We have somebody, you're going to get a personalized conversation to get the right insurance for you, right? So Rosalind, you said, if you remember correctly, the employer can contribute based on class. So the classes, I just looked it up and I put the link in there: full-time, part-time, seasonal, collective bargaining agreement, waiting period, international employees, geographical locations, salaried, hourly, temporary, and then it says a combo of any of those above. So there's quite a few different contributions, you know, or classes. I have a farm that is not offering to these. They're not really seasonal. They're full-time, but they're like exchange students, but they're exchange workers, and they come and they work full-time for a certain amount of time, but they come with their own health insurance. So we kind of listed them as seasonal, to offer them health insurance, or not have to offer them health insurance because they don't need it. They already have it. So there's different classes, and you can do that a little bit with regular insurance as well.
You just can't make up your own classes.
Correct.
So
You can't just say Bob's.
or management, and you have to treat everyone in the same class the same.
Correct.
You can differ if you have classes. That's why you do classes, to treat them differently, like the contribution strategies. So, you know, it was, you know, W-2 versus, you know, 1099 or something like that.
Right.
You'd probably treat them quite a bit differently in terms of your ICHRA contribution. You can do that as long as it's one of those defined 11 classes. You can't make them up on your own.
Right.
And that is part of the plan setup. And that's why it's nice to have a TPA. The TPA wears all the things to keep you out of the weeds. So, and make sure you're all compliant. In case I have talked to several employers like, well, yeah, here's what I want to do. I want to do this. I'm like, no, you can't do that.
Yeah.
So, I think we've all
I just had that. Well, we don't want to make him salaried. And I'm like, well, then you have to offer to everybody. Well, we don't want to do that. Okay. So they just bumped their rates. And I went out there and enrolled 2 people because they don't want to offer it to everyone.
Right.
Mindy is asking, she said, are the owners excluded from participating in this? I thought I read that somewhere.
They are. They can't, you know, owners get screwed on everything. So,
Is it owners completely, or is it owners like so in S Corp, you can't do section 125s, but if it's a C Corp, you're an owner, that's a little bit different, right? Because then you're actually
a lot of my expertise area. That's where
Um,
I start referring to the CPA, because I don't want to
Yeah.
give that advice, but typically, you know, owners are, you always want to check. And yes, there's S Corp, C Corp, LLC.
Yeah.
Sometimes there are ways to do that. Or you know, I'm sure we've all heard about, well, my accountant says, and I'm like, that's a conversation for your accountant. If you are fully okay with that, that's fine. I'm out of that equation.
Right. I always say, if your accountant says it, then good, because then it's the responsibility is on the accountant.
Yeah.
I'm only going through this right now, changing our structure to an actual C Corp, not an LLC filing as a C Corp. So I will be an employee, but the government cars out owners of S Corps from contributing or being part of the section 125, which is the health insurance stuff. So Jill says, Todd and Chris, do you go to the employer's place of business to sign people's up for the marketplace? I do, but I live in a small town. I don't know if you, Todd, do you actually show up on site?
It depends. So it depends on what the employer wants, because you can actually, even though, you know, and ICHRA is technically a form of group insurance coverage. I know that sounds odd because we're taking advantage of the marketplace. However, we're in our office, we've had those discussions. I've dealt with lots and lots of group just over the phone and email and Zoom calls. It's depending, you know, part of it is geographic location. The group I picked up that was all screwed up because of the platform, that's up, and that's probably 3.5 hours away from me. Am I going to run up there? Not if I don't have to. So I dealt with them, but the way their enrollment went, and because their prior platform and screwed, so I got involved. This is an ongoing ICHRA, and got involved in it, and I had not set it all up. Then we switched to the TPA away from the platform, and we did the one-on-one. It's funny because I just had a Zoom meeting with them yesterday, and we discussed how it all went. I said, tell you what, it might be easier just with some of, they did a really detailed survey of all their employees. And this is a group of like 150 some people. It was really good feedback. I said, tell you what, I think to smooth things over, because a lot of people had questions, I'm going to come up there this year with a couple of people from my office, and we're going to sit down and we're going to do as many people as we can, do the one-on-one, like 15-minute increments. As long as, you know, they can associate a name with a face, They're going to be a lot more comfortable with the process. We can get all the information we need. Even if we don't enroll them on the spot, we're going to take that information back and enroll them then. So it's really up to the group. And
Right.
sometimes that's easier as opposed to like even a group of 10 people. If you've got them all enrolled in ICHRA and it's open enrollment, you're playing phone tag, you're trading emails, you're probably better off just take half a day, go there and knock them all out.
Right. And then you're done, which is what I do because I small town, I'm just going to drive there. Now I had one that was way up north. Yeah, I didn't during open enrollment, I didn't drive 2 hours to go up there.
Right.
One of the things that I think happens to, and I don't know how many here have had that, but if somebody shows up in your office and says, I have this thing, I don't know what it is, my employer's giving me this money, and you find out it's an ICHRA or a QSEHRA, that is a golden opportunity to call the HR person, to call the employer and say, hey, I will be your dedicated agent to help your employees use this as a benefit. Because if they are just given something and they're walking out the door going, I don't know what I'm supposed to do with this, that means nobody knows what they're supposed to do with it. And probably the business owner or HR person just thought this will be cheaper and easier, but they don't know how to explain it. They don't know how it works. So use that as an opportunity to call the HR,
It's
right? Like,
when you say that, so just this week, 2 days ago, I was talking to a gentleman. He and his wife, and kid, and she's pregnant. She's eligible for a state Medicaid plan. He works for a small employer. He's like, he called me back, says, hey, thanks for helping my wife and kid get set up on Badger Care, but I still need something for myself. So I said, well, let me just rejigger this comparison through Health Sherpa. And he explained like, well, we have, available group coverage through work, but it's this really high deductible and they're only contributing this month. Well, guess what I said? Well, you know what? This is going to work out way better for your employer and you. I premised it on him. He was going to get a much better deal because he's eligible for a really large subsidy through the marketplace because he was 58. Huge subsidy. I said, this is going to help you. Why don't you go back to your employer and see if he's open to talking to me and saying, he really had to explore this ICHRA thing. I explained it a little bit to him. I didn't want to get too far over his head. I said, is everyone in this group of yours, are they situated similarly, like same type of job, maybe compensation as you? He said, yeah. He said, well, here's a way for your employer to get out of all that and all of you get a much better deal. Well, guess what? I'm probably going to pick up 12 new clients.
right.
To your point, Christine, just out of an ask like that.
Just an ask. So Mindy, you said maybe this was already addressed and you missed it. Is there any participation requirements for employers who offer ICHRA and QSEHRA?
I don't think with QSEHRA there is, like I said, I'm not an expert on the QSEHRA.
There isn't with QSEHRA.
There are no participation requirements. If you get 2 people out of a group of 50, that's fine.
But over 50, there is some requirements. So it's the similar to offering group, like it has to be affordable. So there can be some that it's not affordable and it's cheaper for them to go on the marketplace. But if there's a group of 1,000 and the there's only like 10% enrolled, yes, they're going to get in trouble because they're not doing it correctly. But under 50, there isn't.
There's really very few rules. That's why it's, the combination of the ICHRA and the no rules and the subsidies in the marketplace. But I said, it is very much state in your individual market dependent. You
Right.
may only have, there's certain states, like we're fortunate, like in the county I'm in Wisconsin, there's 10 carriers available. You go down south to, Mississippi,
Right.
you get the Blue Cross, and Blue Cross. Well, guess what? It's probably not gonna be a real good situation to do an ICHRA.
Right. Yeah. In Texas, right? Texas, there's 2. So yes, I know this can be an issue. Donna said back to reimbursements and employee proof of premium. So the employee must pay the premiums before the reimbursements are made. And I had a prospect where the employer wanted the proof before reimbursement and she couldn't afford the insurance. So they can't reimburse you if you haven't spent it. Now, I don't know how, like if you show them a premium, I don't know how do you have to show that you paid it to get that reimbursement, but it's usually pretty quick. It's not
No.
like a month later.
No.
It's especially if
Usually
it's
within
a employer
within
platform
the next 5 to 7 days
at
is
the
when you get
most.
reimbursement. And
Yeah.
I've had the group down the road that I inherited, the employer is very generous. The guy I was talking to was having what he could cover his whole plan cost. He was getting 100% coverage on his health insurance, which he is not getting on the group plan.
Right.
He would not do because, well, I got bills to pay. I'm like, well, you need to figure out how to make that work because you have a employer who's being really generous and offering you to cover your entire insurance premium. He wouldn't do
Right.
it. But I do
Right.
understand everyone's got financial obligations. They only get paid certain times of the month, and your insurance is going to hit you on a certain date, or you can make a payment. A lot of them are flexible though. I mean, you can go you can go online within, the 30 days and make an
Right.
online payment as opposed to setting up an EFT where they're just grabbing it on the first or whatever date. But yes, I have run into employees who bring that back to me.
And it's happened. And, if they can figure out a rhythm, all right, what bills can you postpone for a week, pay this, get reimbursed, and then it's there. But then that's where maybe they go on the marketplace. Maybe the ICHRA's not, they say, no, I'm not going to take the ICHRA. I'm going to just go on the marketplace and play it as it is. So,
obviously a credit card payment, takes care of all that situation, but I know there's a lot of people, they will not do a credit card, and
right.
financial standpoint, they can't deal with that as well. But and I've
Credit cards are the nicest because you can pay it, have it reimbursed back to that credit card before the payments even due. So, if somebody can do a credit card, that's the way.
Sometimes you have to explain it. Honestly, you have to explain it to some people. I'm sure we've all had clients like that. Like, you're getting full reimbursement for what you're paying, and you're getting it within 5 to 7 days. Your credit card payment isn't due for 30 days.
Right.
Just try not to go crazy with your credit card.
Right. This is a great way to get your credit built up, actually.
Right.
I mean, heck, you're spending and reimbursing within that same time period. Well, we're almost at the top of the hour. If there are any last questions on there that I missed, I tried to go through them all.
If I had anything else newsworthy or not, that I think we covered a lot of ground.
Nothing's really changed as far as I know, as far as legislation, as far as QSEHRA and ICHRA, it's still the same. Is there somewhere I can be directed that would provide training? I like to you can go on Take Command and it's got all the training. Now it'll pop up saying, do you want our help? But it explains it in great detail because they're trying to get clients. So you can certainly look on Take Command, what it is, the company, the resources, the rules. I mean, if you want to start digging, I mean, as Todd said, he's been doing this a long time, and it was about 18 months because there's a lot of gray that you're trying to figure out. Just like the Affordable Care Act, there's a lot of gray that's getting a little less and less as the time goes.
I will say, Take Command, their website.
Mm-hmm.
If you want any information, they do a really, really good job of explaining it. Me personally, I'm just like, I don't need to have all these other fees associated with it. My whole thing is I can do well by myself just by writing the individuals through the marketplace. I don't need a platform to do that because the platforms, I don't, there is some value there, but it's not enough for what they're charging for, in my estimation. It's just if you're trying to get a sale, now you're adding on a whole bunch of expense onto something. So if it's close, if you can save an employer 15% and they're getting out of the insurance business and love this concept, and now use a platform and they charge all their fees to the employer and or you, well, guess what? Now your 15% just went away and they may not be real appetizing anymore. So, right. But the Take Command website, they do an excellent job of explanation.
They do. I mean, you can use their products to explain it to an employer. Get with the TPA, look at Take Command. Sometimes the $15 per member per month, people are like, whatever. I've mentioned it and the HR person was like, sure. And I'm like, oh, all right. So it kind of depends, know your people. And yes, you have to do the reimbursement for QSEHRA the same way. You have to pay ahead. It's a reimbursement. They need to show that payment. Jill, you had a question.
Yes, I'm just still a little confused, Todd, when you said you're not using the third party administrator, you're kind of handling it yourself. I guess I'm just confused, and I know this is specifically with ICHRA. How are you handling it yourself? Or did I completely
miss it? I do use a third party administrator. So there's a different, when I say platform, that's like a Take Command they'll step in and do everything. They'll write all the business, they'll administer, and they charge the employer, and they may give you some sort of nominal compensation. When I say third-party administrator, that's where if you're familiar, okay, I'm pretty comfortable with this ICHRA concept. I just need someone to get the plan documents and do the plan setup. So I go through employer and they're like, I say, yes, this sounds great. Let's do this. Okay, well, the next step is I'm going to connect you with the third-party administrator I use, and you're going to have a plan setup meeting via phone. Takes maybe 20 or 30 minutes. Company name, rank, serial number, so to speak, and then all those things about who's eligible, how do I want to do a reimbursement. And then they're making sure the plan is all compliant. And then the third-party administrator, I also use them for the reimbursement. Because like I said, my personal view is as an employer, you want to stay out of anything to do with reimbursement or trying to run it through payroll. I know there's advocates of that and everything else. So I do use a third-party administrator for the plan documentation, setup, and the premium reimbursement. When we're talking about like, how do you do this all yourself? I'm talking about just like, I don't need a platform to do enrollment. I'm going to use Health Sherpa, or there's some cases we all have to use a marketplace for certain circumstances. We do all the enrollment, obviously keep all the commission, so I'm not like giving that up to somebody else. And that way, I'm not having to charge, the employer's not getting charged what the platforms charge. Because if you can find a good third-party administrator, they will charge extremely nominal fees. And there's like the one we use here, it's just for the plan document setup. It's $350 once. And then they have a $350 setup fee for each employee one time in that renewal. And then to do that, for all the reporting that they do and the PCORI documentation, all those other things that they're required to do, they'll take care of that. And then they'll do for the, they have a $75 a month minimum amount for the reimbursement. So it works out to $450 an employee per month. Well, that's a good deal, as opposed to like $15 or $20 or $25 that the platforms do. It just depends how much you want to get involved with it. I mean, there's some employers who are like, yeah, I'll do this all myself. Just get me the plan documents online and we'll set this up. I'm not a big advocate of that because there's people can get in too much trouble.
Right.
Yes.
There could be a HIPAA issue too, depending on if they're doing reimbursements for medical expenses. So
Was that clear though, Jill?
no, $4.50, not $450.
Yeah.
Now it's clear.
Okay.
But that makes sense of how I use the TPA and what I do. So you're selling the ICHRA, and then, okay, now I'm going to set you up with the third-party administrator I use to make sure your legal documents, you're not going to get yourself in any trouble. And I would advise that you use them to do the reimbursement of the ICHRA allotment, and then I'm going to enroll all your employees.
Yeah.
And
No, it makes perfect sense. I guess we're just all curious, who on earth are you
So
using?
they all want to know who your TPA is.
no, I don't have a problem with that. No,
Yeah, you could put it down, and you can also look for the ones in your area. But
yeah, because I know I think you guys are from all over the United States here on this call.
right.
I just use it's one in Heartland, Wisconsin. It's called Diversified Benefit Services. Obviously, most of they'll do business anywhere. If anyone on the call has questions for me in particular, you want to email me or call me, I'm completely fine with that.
If you want to put your email in the chat. So there's the DBS benefits, diversified benefits, their email or their website. And then one last question, Donna says, I have a group I'm currently working on and running short on time to maybe even offer ICHRA. Also, does the ICHRA versus QSEHRA follow the FTEs to determine 2 or 50 or more?
Yeah, so that's where we at 50 plus, there's that whole how you get to count the ANT count.
Yeah.
Combination of so many part-times are equal to full-time. That's where you get into a little more obligation, and that's where you have to do the whole affordability calculation too. And that's a fairly complicated process. So you're definitely going to want to use a platform or a third-party administrator for that, because figuring that out can get a little dicey.
And it is the same calculations. I mean, the feds have kind of set that up. They're like, this is what a full-time is. So yes. Yeah, when you start getting to the larger, because there is some calculators out there. The third party should have that. The platforms, like I said, I've used Take Command. You can even ask. I have found them, though they've gotten bigger now. When I used to work with them when they first started, they responded pretty quickly. Now they're a little bit behind because they have a lot more. But yes, so if you're over 50, there are some requirements. There has to be affordable, just like the marketplace. There's some affordability. But if it's under, then you don't have to worry about that as much. All right, thank you all very much. Todd just put his information in there. He has been great. I ran into them because I had to use an FMO to sign up with Molina. Those of you who are familiar with Molina, you have to have them. And I was like, what? And that's how I ended up under Transition Health how many years ago. And they've been great. He and his partner, we see each other all the time at all the insurance agencies. And we were like individuals over here in Wisconsin. And then also now I have an agency. So it's fun having some people who've gone through this to have a little resource too. Thank you, everybody.
Thanks, everybody. Appreciate your time.
Yeah, thanks, Todd. I appreciate you coming on and spending your Thursday with me.
Bet.
All right.
Thank you, Todd. Thanks, Chris.
Thank you.
Bet. Thanks for coming.